Hi, everyone. Hope you had a great weekend. Clearly, the stock market had a hangover. Not surprised following the sell off on Friday. However, I got to admit, what I was looking for to happen did not happen today. I wanted to see maybe us cut through Friday's low a day and then rally higher and close higher than Friday's lows. And that we could not do. And so we sold off. And one stock that I always like to look at just to get an overall feel for how the market's doing is Facebook. Not too long ago in May, Facebook was looking like it was building out, a nice handle. In June, it started to weaken a little bit, but still, it looked pretty good until today. Facebook cracked in the 50-day moving average. Now we got to see how it acts around this moving average. Another stock that I noticed selling off on big volume is Deutsche Bank. This thing looks very Lehman-esque, 2007, 2008. So Deutsche Bank, I know that there's a lot of news going on, but I try to stay out of the news right now because it's just ridiculous. I'm glad I live on Maui, everyone. But Deutsche Bank appears to have a lot of systematic problems. And, when bank stocks look like this, Goldman Sachs is trying to roll over that nice pattern it was just trying to build. Now it's trying to completely roll it over. Bank of America, similar situation. JP Morgan still holding up, but, the same type of chart pattern. Wells Fargo rolling over. You saw E-Trade and Interactive Brokers. Man, talk about getting some high quality long signals that should have indicated that this stock was ready to blast out, but yet it's just rolled completely over, completely failing. IBKR, total failure. So whenever you got stocks like this, it's really hard to be bullish on the market. But at the same time, you got Microsoft buying LinkedIn, one of our speculator names, EBIO. Good day to decide to sleep in the morning and not wake up. I had no orders, so there was no reason whatsoever to wake up in the morning for the market open. I didn't know that EBIO was going to gap up to 368. I would have known that. I would have sold half of it in the morning at 368. Instead, I still have my partial 1,000 shares each left. 3,000 left. So now I should have 2,000 shares. And I'll split those up. So intraday, it had support at 260. It broke 260. I got out at 259, closed at 239. So that's that. My remaining sell stops in EBIO go to 162 and 121. Just unfortunate that I wasn't up in the morning because I could have gotten one EBIO. That's really the only thing I regret today. LABD continues to move without me, so obviously I have regret, but I'm not chasing stocks in this market ever. So if it gapped up on 33.59 and didn't hit it, nothing I could do. And today, intraday, I moved my limit up to 34.59. And intraday, pulled back to 34.80, didn't hit the limit, so there's nothing I can do. I don't have LABD. I didn't sell EBIO at the highs, but that's that, But getting back to the market, the NASDAQ selling off below the 50-day moving average on above average volume and even higher volume than the day before. That's another distribution day, and that's ugly. This is looking like it's going to roll right over. This is why I'm going to repeat over and over and over why I do not like to see us rally every day off of any low ever, 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 ever. I want to see the market trade sideways, blast off, trade sideways, blast off, and continue to do that in a pattern over and over and over and over. The last time I've seen that really was never since 2008. But in 2003, it kind of did that. Would blast off here, move sideways, blast off, kind of move sideways. But even then, it really wasn't doing it. It's always been this V-shaped move. So no surprise on my end that we're rolling over again. So shocked, not. But the problem is that what was looking like could have been a good pullback on Friday is turned to a pretty ugly pullback pretty fast. And while the market isn't broken, obviously, our operational models need to change. So the NASDAQ and the NASDAQ 100 have switched to operational neutral conditions. The S&P 500 with its near close below the 50-day moving average is borderline changing to an operation neutral condition. But I will consider that in effect because it closed below these recent lows. I don't need it to sell off further, especially with the uptick in volume. And the Dow Jones Industrial Average closing below its 50-day moving average, and the New York Stock Exchange confirming the S&P 500 50-day moving average closes, puts these indexes into neutral. The Russell 2000 is the only one above the 50-day moving average, and I can't count this as support lows because a one-day consolidation is not what I consider a good base low. So to me, the most recent consolidation point was all the way back here with Russell 2019. So if the Russell 2000 goes below the 50-day moving average, that'll switch it to neutral. But for now, it remains under buy mode. But you better believe I'm not taking any new long positions unless everything lines up. And on that end, nothing lines up. I only have, I actually, what am I saying? I haven't gone through my current holdings yet, but after going through my long and short scans, only one holding showed up in my short scans, and that's PRMW. PRMW was a long position back here when it broke out above the March highs. This was my final cut loss level, 10.15. Today it traded down to 10.42. I will not be using 10.15 anymore because of the heavier volume move below the 50-day moving average. And now with the stock looking like it's putting in a rolling over top, 10.42's low a day is now my final low a day. So technically PRMW, it's a 100% full sell signal. After the low volume move sideways, it shouldn't have broken down on heavier volume. So I'd rather get out of PRMW than use this as half the sell stop, and the next level is half the sell stop. And maybe if the market can find some footing, we can move sideways. We'll get new long signals. But like I said, right now we got nothing going on. ILE, I flagged, but if we just get into everything, it's not all lined up. ILE, while it may be touching or near, it's not touching quite the 20-day moving average. But while it may be near and all the moving average stacked up, you can see that it's still well off its previous highs. Doesn't have enough clear accumulation, and it's just too choppy overall to even consider a long position with the market like it is. I would need this base to be be more sideways, basically with the 50 above the 200, and since that's not the case, no good. ZG, kind of a nice move, but too short of a handle pattern. It's not closing higher than where it opened. And also, it's not touching 1020, so no thank you. Sight was an interesting potential long position off the support. As a recent IPO, all the bullish candles holding support, another pocket pivot point signal and increased volume. But in this market, the only way I would have taken today's move, which would have been a good move because low risk if you use today's low days or final sell stop, even if you use this low right back here. It's not a CanSim quality name, so pass. I also flagged, just to show you some decent stocks out there, HBM, no way, base isn't long enough. NEFF, nice breakout overall, but it's not touching the 20-day moving average, and like I said, everything has to completely line up right now. Plus, NEF is extended anyway. As it breaks out, you can see the 200-day moving average is very far away, about 50% away. Zero interest. RDEN, off support, that's nice also, but it's nice. It needs to be great to become a new long in this market. And then I also flagged AEUA, which is Anadarko Petroleum, some kind of warrant. I'm not too sure, but nice technical pattern. Very, very nice technical pattern. If it fails, it sure wouldn't cost you much, and I think everything is actually kind of lined up on this one, isn't it? 5's above the 10, 10's above the 20, but unfortunately, the 5 is trending lower, and really, this isn't enough of a volume and BOP surge to want to go ahead and buy this stock here, especially when APC just looks middle of the road right now. So, no new long positions, no new short positions, I guess, unless you're thinking about the Dow Jones Industrial Average. The crack below the 50-day moving average is pretty clean here. The SPY doesn't quite look the same. The QQQ doesn't look the same. IWM isn't there yet. But the DIA, the Dow Jones Industrial Average, looks like a fresh crack, low-risk crack below the 50-day moving average. You could play SDOW, but you know what? I'm just going to go ahead and stick to DOG. It showed up in my ETF scan, and it also showed up in my price volume BOP surge scan. So I'm going to go ahead and use this one since it had a volume move behind it. It doesn't matter what you use. You could even use DXD. I really don't care. I'd rather be in cash here. I saw the VIX today. Huge jump. A lot of fear in the market in a very short period of time. Obviously, it can keep jumping and we can keep selling off, and I'll just let my stop losses hit because, once again, I'm not chasing signals here. So SDOW is the only one that matters. SPXU, it's a little extended, just to look at the SDOW, you can see it's touching the 5 and 10 here. SPXU, you can see it's not touching the 5 and 10. So that's, of course, once again, another main reason why I'm in Look PSQ. One of the main reasons why I will be taking the Dow Jones Industrial Average short. But I'll be using DOG 2%. That's it for Tuesday.